Okay. All righty. Now let me get this up here. Okay.
Well, this is different.
Yeah, professor in the blackboard.
Texas is, anyway. You don't need to see my ugly face on there anyway, so we'll just go from here. Tonight, we're going to talk about business budgeting. One of the most important things any company can do before they get started, but certainly after they get started, they got to keep up with it, and it'll keep them out of trouble if they stick with it. So, you know, we're gonna look at why this is so important tonight. Now, what's this? All right. Okay, so creating a realistic budget is something, it just has to be done. I don't know why this is on here. Still trying to fix this. Okay, anyway, I can't get rid of that. All right, so in doing a realistic budget, the main topics, of course, are sources of income, regular expenses, expected but unusual expenses, and unexpected expenses. Those are the things that a good budgeter that keeps his company out of trouble has to learn to do. So we're going to look at these one by one. Determining sources of income. First of all, in doing that, you have to figure out how much your product or service costs you to provide it. So, you know, if you're selling a product, you know, you figure the purchase or production costs to you, and you should be calculating rent, supplies, payroll, phone, utilities, insurance, and all that stuff into that single product or single service by apportioning it to the cost for service charges. How you do that is you take all those different costs, you total them up, and then you divide it by how many products or how much of your services you expect to sell that month. You divide that number into the total of all those, and then you've got to figure to add to your actual, what you actually pay for it. And that tells you, all right, to do business, this product not only costs me what I buy, but these are all the things that I have to pay throughout the month that have to come out of that too. And this gives you a realistic picture. Most people just take the amount of the product or service they're providing and don't take those things into account. So then they find that they're charging not enough to cover everything they have to pay and make a profit. And so they get themselves in trouble. After several months, they finally figure out, uh-oh, something's not going right here. So if they do this from the beginning, they're going to save themselves a lot of heartache. So after you do that, you know your real cost of what you're selling, and you decide on a reasonable markup over your combined costs to find out what you should charge. That's how you decide to make a profit. You have to mark it up enough money to pay all these things, which you've figured now, and have a bottom line. And if you're working on it and you get to the bottom line and it's a negative, then you know you got to move your markup up higher because you got to make a profit. And if you're not, you might as well not be in business. Okay, so the next, you would estimate realistically what sales you will realize per month. Now, that's not always easy to do. Some months may be more or less than others based on holidays, vacations, and that kind of thing. when I was in the staffing industry, I had my multi-million-dollar company here in Atlanta. I had 3 offices. I would always budget it, but for November and December and January, I budgeted a whole lot less sales because of the holidays. Because not only would a lot of my staffing people take holidays off, but a lot of my clients would slow down for the holidays. And so you want to figure that as close as you can. Sometimes you have to go through your first year and then you got a good record to look back on, but that's a good way to do it. You have to estimate it as realistically as you can. So at the top of your budget form, enter the expected income for a month. Now, I always did a budget for a year, but to get to a realistic year budget, you should do 12 months. You should budget what you expect each month for 12 months and then total all those lines up and make it an annual budget. So that goes to the top of your form. Then you have to calculate realistic expenses. You figure your fixed expenses first, line by line, and you can put them in alphabetical order, but you should do that later for ease of finding, because if you got a long budget with a lot of items, if you put them in alphabetical order, it's real easy for you to find what you're looking for. And you may have a search engine that will find it for you if it's in alphabetical order. So you figure your fixed expenses line by line, which are fixed expenses are rent, computer and printer expenses, utilities, phone, payroll and taxes, payroll taxes, and automobile expenses. All those are pretty much fixed. Now, the automobile expense, you'll get to a point where you will be very close on figuring that on a regular monthly basis, but that may not be so regular as some of those other ones are, but those are fixed expenses that you can put in lines to begin with, because they're going to be the same month after month. Okay, then the next figure, you approximate floating expenses. I call them floating expenses, and these are advertising, supplies, meals and entertainment, gasoline, and mileage. They're floating because you may do a 3-month advertising project, and then you may not do any more advertising for a couple months. Your supplies are going to fluctuate. Let's say a big project's coming, you're going to have to order more supplies and copy paper and toner and all that stuff. And those are not the same every month. They're different. They're floating. Meals and entertainment. If you're going to, you only can count so much of it off in taxes, but you can count a portion off of that taxes. But there may be months that you're entertaining clients and stuff more than others. So you want to budget that and get it as close as you can. And then, of course, your gasoline and mileage is going to fluctuate depending on if it's just you, or if you have, I used to have an outside sales staff of 4 different people out all the time. And I paid them mileage, and they had to turn in mileage sheet, and I reimburse them. And, you estimate as best you can those floating expenses, and that's going to help you with your budget. Expected but unusual expenses are things that, like toner replacement. You're going to have to replace toner, but it's not a regular factor. You may only replace it twice a year. Depends on how much you use. If you got a lot of copying being made, then those are going to be more high expenses. But you want getting these figures as close as you can on a line by line basis is going to help you understand your company, what you need to make a profit. It's going to keep you out of trouble and getting behind where you're in the negative, in the red. Software updates or upgrades. Periodically, we all get software updates or upgrades. Now, the upgrades cost more, updates usually are free. But if you're gonna upgrade your software, because either you're gonna change software or you're going to get a better end of the software you're in, it's gonna cost you. If you do that, it's sort of expected, but it's unusual to happen. Those kind of things don't happen very often. But if you think that's gonna happen during your year or a particular month, you wanna put that into your budget so that you're covering all that, your cost. Business association fees, when I was the CEO of the Cherokee County Board of Realtors for a couple of years, I joined Rotary up there in Canton and the Chamber of Commerce. And, so you have to pay fees to do that. So, you want to take those into consideration. Those are fees that are expected, but they're unusual because usually I only pay them once a year, but you don't know if you're going to join another group during the year. You may find a group that, I need to go be a part of this group because it's good for business. Well, you're going to have that expense. So, you got to get that in your budget. And then if you have employees, you want to count bonuses. Every year, my staff in the 3 offices I had, my permanent staff, every year at Christmas, I gave Christmas bonuses, and it was based on their time with the company that year, and the year they're with. If they're a full year, then they got the full bonus. If they were, which was hundreds of dollars. If they got if they were there half a year, they got half of what people who were there the full year got, or if they're a quarter of the year. If they were less than a quarter of a year, they didn't get a bonus that first year, because it's for bonuses for rewarding people who were there doing the job. And when they're new toward the end of the year, I never felt it was right to give them a bonus. So, and they all knew that. I tell people this when I hire people, I would tell all this up front so people would have a good idea. But as again, I say, these are expected but unusual expenses. Nevertheless, you want to make sure they're part of a good and realistic budget. Okay, now we have unexpected expenses. For instance, workplace injuries, workers' compensation charges. Every company, at least in the state of Georgia, has to carry workers' compensation insurance, or you can't be in business. And in the staffing industry, people cheated on it all the time. I was a vice president of a big staffing company here and in Georgia, and there was like 7 offices, and I had them all over the place here in Atlanta. And I got into the system one day where they were hoping I wouldn't get, and I found out they were cheating their workers' comp carry out of $400,000 a year in insurance premiums. So I called the comptroller down. I was on the executive floor. I called the comptroller down. She came in white-faced, and I said, Sarah, what is this I'm seeing? And she said, oh, Dick, I knew you'd find that. I said, what is this? This is a felony. You can't do that. So I went in the system and changed it all back. And the money came out and went to the insurance company, and the board of directors was in my office the next day, and they said, what do you think you're doing? And I said, you remember you hired me and you said it was because of my integrity? I said, do you think I'd be a part of this? I said, this is a felony. You can't do this. So I left, and I didn't turn them in, but so many people were upset that I had left. They called the insurance commissioner and told them I had no idea and turned them in. Guess what? Nothing happened because the insurance commissioner's office was on the tape from them. They were paying them under the table. Anyway, I left because of that. Sorry to tell you a story. But you have to have, in Georgia, you have to have workers' compensation insurance. Unexpected expenses would be purchase of new equipment or furniture. Maybe a computer just goes bad, printer breaks down, you know, whatever you have, calculators stop working, or you need a new office chair or desk. These are unexpected because you start out thinking that stuff's all gonna last, but a lot of times it doesn't. Now, sometimes this stuff lasts for years. But these are unexpected expenses when they happen. I was in an office working, leaning back in a big expensive desk recliner, and a chair broke and I went flipping back. Of course, they were afraid I was gonna get them for workers' comp. I said, I don't do that stuff. Just get me another chair. That wasn't hurt bad. It was no big deal. Signage changes could be another unexpected expense, if you're a retail store, for instance, you may start out with a sign and then you realize I need a bigger sign that attracts more attention. That's not something you expected to do, but all of a sudden you decided this is going to help out. So these things can happen and cause you, some of it pretty expensive stuff. These don't usually go on the formal budget plan, but if you're concerned, an allowance can be listed as an expense. So these things have something that ordinarily happen. But let's say you're thinking some things are getting old and this might happen this year. I would, in one of the months during the year, I would put an allowance in there so you allotted some money in case it happens. And if it doesn't, that just drops to the bottom line, you make more profit. But if you do use it, it's there and you still know what your bottom line should be. Okay, simple budget plan can be set up as a profit and loss statement that we call a P&L. This is sort of a typical template for a P&L. I gave you one of these in the first session we did. We didn't go into detail about budget, but we did touch on it. So you can see, as I was telling you before, first you list at the top of your budget, you list your income. Product sales or service sales, or both. Maybe you're, well, like right now, my company, it's just myself and my wife right now, but my company, I do book publishing for people. So that's product sales, I guess that is a service sales too. And I also am a consultant to several companies. So I do both. So when I'm setting up my income, I want to figure those monthly, and then total is up, and that gives me my annual budget, what I expect total money to come in for the year. So then you add those together monthly and yearly, and you come up with a total income line. And then your expenses, you start adding all the expenses that you expect to have: advertising, banking service charges. If you're doing a business that uses credit cards, you've got to set up a credit card handler that handles your credit card stuff with a bank. And those charges can get, in hundreds of dollars. Because that's not just a regular bank service charge, it's a percentage of all the credit card money charged. And if you don't put that in, you can get in big trouble. Then you have your business expenses. That's usually a place that I will stick things like, just some unusual stuff. I can't think of it off the top of my head, but I use that line to put in things that don't fall into normal categories. Computer maintenance, for instance, I have a computer guy right now. He charges me $45 or $49 a month. And so I'm paying him, $600 a year. But if you know what computer maintenance is, if computer guys come in and you don't have a plan, it can cost you thousands of dollars. With this plan, I can call him anytime that he's in business during a business day, anytime. He's very responsive. He comes right into my computer. He has saved me from attacks of hackers, all kinds of stuff. And so I do that. Now, a small business doesn't really have to have a computer maintenance guy, but you will have maintenance from time to time. You're going to have to get someone to do for you unless you're a computer whiz and you know how to do it yourself. Website. My personal feeling is if you're in business, you need to have a website. Website's not too expensive, but it might be $200 or $300 a year. And that's if you do it yourself. If you have someone else do it, it's going to be a lot more. I do all mine. I do my own websites. Then you have your contract services. If you're using a CPA or someone there's accounting fees right there below it, under it. You know, anything that you might sign an agreement with. For instance, the companies that I do the consulting work for, I have them down for my expenses that it cost me to do that stuff. I carry that under contract services and I have their names listed below, and each one of those companies gets a figure put next to them depending on what the cost is for that. Corporate registration, you have that once a year. It's usually $100, $150. Credit card fees, your fees for your cards and stuff. I always had a florist in one of mine because now that I'm a geezer, I got more friends dying by the year, so I always send flowers, and I have an account for that. I didn't used to have that when I was younger. Printing and copying, you know, those are you use reams of paper or not so much, depending on what it takes to do your business, or toner, and other kinds of supplies, pens, clipboards, just things like that you use in everyday working of your business. Other type of expenses. Every company should have insurance, liability, and right now I carry over $1 million of liability insurance, umbrella coverage on my company. And that's not that I'm worried so much, but it's not too expensive. And if someone gets a wild hair and wants to sue me, well, then I've got insurance to cover it should they win. Now, I've been sued in my company, the big company. I was sued several times. Never lost a case because I do not do wrong. I do right, and I can prove it. And when all these people charge me with wrongdoing, I can easily prove they're lying. And I've won every case and never had to do that. Now, there was one time I paid some attorney's fees, but I usually am my own attorney because I know how to explain exactly what they're trying to say, and I know what I didn't do. I do not settle because I don't. If I did wrong, I would settle immediately. I would not argue. I just do it because it's the right thing to do. But I don't do wrong. I never did wrong with people. I took care of people, and when they lied because I had to fire them or something, then they said I was prejudiced. And then they take me to court, and I go to court and say, well, Your Honor, I don't know if you know it or not. I have hundreds or thousands of employees, and 95% of them are minority. Does that make me prejudiced? The judge would just throw it out of the court because you see how ridiculous it was. But you should have some insurance. Other costs should be, didn't mean to get there. Professional fees, any refunds you might have to make. Someone returns a product, you might have to make a refund. Reimburse expenses. You have to reimburse. You have employees or outside salespeople. You know, there's some. You know, you tell them what you're going to reimburse. Don't just reimburse everything they bring in. Set that up front with them. But those things you have to reimburse that they are out of pocket for. If you travel and go to meetings where you have to pay fees to go to the meetings, or you have to fly, I used to fly all the time. Now I only fly once a year, once every couple of years. So you want to put that in your budget and have those expenses in there. Then you come up with the total expenses. You add all that up by the month and add up 12 months of that to get your year. And you subtract that total expense from this total income up here. And hopefully you got a positive bottom line. If you don't, you can only do one or two things. You can cut your expenses somewhere, or you increase what you charge. Because if you need the expenses you have and you can't cut any, then the top line's where you gotta at. You gotta start charging more so that you can be in business and make a profit. Otherwise, it's not worth being in business. Okay, and then the final tips and takeaways from this: company budgets are critical. And there's so many people don't do budgets, and boy, they should, because those are the ones you find out getting in trouble. These budgets can be adjusted as needed. You know, you may increase expenses from your first months you set up, and you're in your third or fourth month of the year, and you say, boy, I got to increase these expenses, or I got to charge more on the top line because I'm losing money on the bottom line. So you adjust what you're needing. Spending outside the budget can cause problems. You know, when you have budgeted expenses and then you go out and spend money on the outside, you get in big problems. And you can take away all your profit very easily if you're not paying attention to this. If the bottom line remains negative, either increase what you charge or cut expenses, or both. It's all you can do if you want to stay in business. You got to turn a profit. Okay. Let me get out of here. Okay, that's our 30 minutes. Anybody got any questions? See, I appreciate all of you guys coming on here. Most of you don't need this. And I appreciate your support for this. I told Roy Bryan I'm going to talk to him about keeping this up, because our point in doing this was to reach new guys. And if we can't figure out how to reach new guys, I'm not going to keep doing this. If you guys, Michelle, if you or Joe start a company, all you got to do is call me, and I'll give you all advice free. You know, I don't charge money anymore. I used to be a consultant. I used to train people internationally and companies, and I used to do management training. And you know, I used to love to do it, but I'd get $1,000 a day in those days. This was 30 years ago. I don't charge anymore for friends. You know, people want to know something from me, all they got to do is ask me. The point of this is to hopefully, or was to hopefully, and maybe, you know, I'm not saying we're not going to continue, but, you know, if we don't get kind of target area we're looking for, I see no point in keep doing this. But, you know, it may be a little early to quit. This is our 4th week, but we've had the same people just about every week. So as much as I appreciate that, I don't want to have to keep writing these plans if we aren't going to hit the target we're after. You guys can call me anytime. Yeah, John.
Are you going to do a class on like setting up a nonprofit?
I could set that up. I mean, you know, I've told you I want to get other people to do the training.
Right.
I don't know that I know, even though I am in charge of Georgia Men's Advance, which is a nonprofit.
Yeah.
It was set up by our CPA. Now, I went to set up one of my companies. I had a ministry company some years back that I went to set up as a nonprofit. And I got into it takes quite a bit to set up a nonprofit the first time. And so I finally decided to back off of it, because every time I turned around, I had other things I had to get done for them. And I said, the heck with this. I'm just going to use my regular company and do this. But there are people that I'm sure will know that pretty well.
All right.
Uh, You can do it yourself. You can go to the Secretary of State and try to set up a nonprofit, but it's what I did. But what happens is there's a lot of twists and turns in doing it. And you gotta provide this, you gotta have this, and you know, you gotta have totally conclusive proof that what you're doing is a nonprofit type thing. And I tell you what, we have this problem every year with the Georgia Men's Advance, which is a well-established nonprofit we've had for 30, 40 years, 40 years. Our CPA, we have a CPA does it. She already sent me 2 notices this year that IRS turned down our tax return. They've been doing this the last 3 or 4 years. Then it has to go to Greg, our CPA in Dallas, Texas, who's the CPA for the whole full gospel thing. He has to take it over and resubmit everything and go through. I don't know what IRS is doing, but they're just trying to make things difficult for people. So I don't know that I feel comfortable of teaching that one, but we might find someone that can do it. If I do the next class, it'll be on hiring people and staffing, which I ran staffing companies for 35 years, big corporations, including my own. I hired 1,600 people in my business here. You know, so, you know, we used to do all the I-9 forms to make sure they were legal, which I don't even know if they require that anymore under Biden. But we used to do all those things that used to be required by the government, you know, so, you know, I'll just say it, I'm a staffing expert. That's what I've done all my life. So, I've even testified in front of Congress where they thought I was that much of an expert on workers' comp insurance because I used to pay huge amounts of money to workers' compensation and I wouldn't cheat on it, which everybody else was doing. Not everybody else, but majority of staffing companies and temporary help companies all cheat. They take their light industrial and classify it as clerical, which is 1/100th of what it costs for the other. I always reported exactly, and it was hard to compete with them in pricing, but God bless us and we did. Any questions? Other? Well, I appreciate you guys coming on, and I'll send an announcement out about the next time, and we'll just go from there.
Plus, send us a copy of the PDF.
I'm sorry?
And a copy of the PDF from the night.
The slides.
I didn't hear you.
Send us a copy of the slides from the night.
Oh, sure. I'll send you those, and it's also recorded if you ever want to go and see that. So,
All right.
yeah, I will send you that. Matter of fact, let me stop the recording. Okay.